Hello, everyone. Welcome back to the RationalInvestor.com's Weekend Frivolity, our cheekily named Broiler Chicken Show. It's kind of fun. Hello, everyone. Looks like we're live on YouTube. That's good to see. I just want to make sure that page is up and running. I've noticed very interesting atmosphere right now in the market. Interesting. I actually feel as though the public is kind of being lulled to sleep here. So good to see. We've got a core group. Of course, we have our education program just marching along, and it's good to see students just working away on course material. And the level oneers, you can see them. It's so cool. Because literally I can start to see them in fact, actually there's a couple family members of mine. And how do you define the top of the market? When family members start coming out of the woodwork going, hey, Brian, I see you're doing pretty good. And boy, I want to learn what you're doing. So it's adorable. I don't know whether they're ready for what you guys are all gone through, but the good part about it is I'm not going to bullshit them. They have to do everything that you're doing if they really want to learn this shit. Doc, it is hard work. I'm not going to kid it. You're all here to learn a profession. I mean, investing money should be a profession, not just some... I mean, you can approach quote-unquote investing as going to Vegas and just rolling them bones. And, if you win, you win. Fucking A, awesome. Hot tip, whatever. But that's not investing, and that's not running a small business of trading. You're just, you're speculating, you're gambling. What we want to do is, keep in mind, I've been at this game for 30 years, right? I want to make sure that 5 years, 10 years, 15 years, 20 years from now, you're still here just running your small business of trading, just taking money from the market on a consistent basis. But anyway, what I wanted to kind of show you was, everybody that starts our education program, this is pretty much who you are. And love you. I mean, how do you hate a baby? You can't hate a baby. Babies are awesome. But you got no business risking your money in the marketplace. And I can see that the level oneers, especially some of the really proactive ones, they're starting to go... Okay, I think I get what's going on here, but you level oneers, keep in mind, they always say a little bit of information is really dangerous. So go slowly. I even put a challenge out to the level oneers. Somebody asked through class today. I just caught the tail end of class. Grim, of course, doing an absolute marathon job. I mean, damn. If I could spend whatever, it's a weekly fee, it's like $80-$90 to just sit and listen to Graham answer all the questions, that alone would be worth the price of admission. He does such a good job, and he's so patient with everybody. Somebody had asked in the class, well, to make a half decent annual income, you got to have some money to work with here, right? And yeah, the answer is you're absolutely right. I think if anything, for new people to trading, it's absolutely horrendously dangerous to come to trading with just a couple bucks in your pocket and think you're going to make an annual income out of trading. That's just asking for trouble. You end up taking really big risks, and maybe you're right once or twice. You start developing poor behavioral habits, and then all of a sudden all hell breaks loose because you don't know how to handle things when you're wrong. But anyway, my message to level oneers, and really to YouTube, if you can get this message, is don't worry about the money to begin with. And if anything, you got to have your nut covered. If that means you got to go pump gas, if that means you got to go take some crappy minimum wage job flipping burgers, if that means you got to... the only job I can get right now seems to be stepping in and helping senior citizens in the COVID situation. Well, that's the shitty part of life. I can't sugarcoat that. And if anything, what I see out of all our central planners and our democratically elected politicians is they're really doing our society a huge disservice. Keep making hollow promises. Yes, vote for me, you get free money. And then you end up the bankers say, well, the only solution we have, since you don't have any fiscal discipline, you stupid politicians, is we got to dilute the shit out of the currency. That's the only way we can keep this crazy game afloat. That's what's basically going on right now. So I don't know. Wow, I watched. You know what? I wanted to. Okay, focus, Brian. Focus. I wanted to mention that what I see right now, the level 1ers are in about week 10 of their introductory program. I think they got the idea of eating their vegetables, the idea of working with a trading plan, and understanding that a lot of this has more to do with you than anything you see in the market. Anything that's said in a newspaper, your success at trading is actually entirely dependent on how you act and when you decide to risk your money, how much money of your stake you're going to risk. Are you going to respect stops? Are you going to take profits when the market affords you the opportunity? That has nothing to do with the market state. I mean, look at what's happened over the past 6 months. We've gone from absolute financial calamity to now basically the stock market's right back at pre-crisis levels. So if you had kept a level head through all that, actually there was an opportunity to make some money. Although, had we talked, in the middle of March, we would be all like, "Oh, the sky's falling, it's the end of the world." So really, making money from trading and running your small business of trading has far more to do with how you manage yourself and how you manage the small amount of money that you have to work with. And I guess the whole point where I'm going with this full circle is you're here to learn the process. And that is the process of putting your money at risk in the marketplace with the realistic expectation of actually seeing a positive outcome at the end of all this. That's the whole point of this whole exercise. Everybody taking the courses and stuff is to be able to create a process where you can run a small business of trading relatively consistently, day in, day out. You just keep doing your thing. With the expectation of making money at the end of all this. Probably people should know, and I don't know whether a lot of people on the internet even understand this, but if you can realize, not bullshit, not paper trade, ooh, look at my system, it does this, blah, 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 but actually realize, show account statements with these actual percentage returns. If you can do better than 30% annualized return on your money consistently over a 5-year period, you've done better than 80, 90+% of all investors ever. So I suggest to students that let's use that as our benchmark. And by all means, if you happen to get hit lucky and hit a couple good names through the January-February period, buy when it snows. And March, April, May rolls around, sell when it goes. And big gains, well, and it's better than 30%. Maybe just take profits and call it, that's it, I'm done for the year. Because keep in mind, you do what ends up happening a lot of times in capitalism is people make a bunch of money in the spring and end up giving it all right back into the fall and winter. And you could argue you get into these really bigger cycles like what Bitcoin went through. They make a whole bunch of money in the last cycle, 2015, 2016, 2017, and then 2018, 2019, 2020, they end up giving it all right back. So keep that 30% annualized return on your money as a great reference that, hey, if I hit this number and I just declare victory, I'm actually doing much, much better than almost everybody ever to play this game. Remember, most people lose money at this game. I mean, just the audacity that we have the audacity to suggest that we can actually make money at doing this is crazy. But anyway, it works. I'll tell you. We got the great part about it is I could show you my accounts following some of our simple plans, profits booked. Lots and lots of anecdotal evidence from our community, our various different students and alumni. This process works, and I love that. I mean, go read our testimonial page. It's poetry. The irony of it all I'm doing is I'm just empowering you people. It's not like I'm telling you, oh, here's the big secret. Well, this information's out there. We just put it together in a nice solid package that really empowers people. So what the level oneers, you're in a funny stage right now because you have a little bit of information. And you're starting to feel empowered. Like I said, you're starting to sort of go, okay, I think I understand how this thing called the process works. What you really have to do right now is you have to start putting miles under your tires. Whether you do decide to move on in the education program, speaking specifically to the level oneers, I think it's a good idea because it keeps you in the loop of TRI, keeps you focused, you're expected to show up for class week in, week out, and the nominal fee isn't really that high. If you just maintain the basic site membership, then you can watch daily briefs and you can participate in the lounge again. It just keeps you in the loop. It is very dangerous for you level oneers because you've been given so much information just to leave cold turkey now. I've seen a lot of students in the past go, well, Brian, didn't want to move on right away. Other things in life came up. And then 2 or 3 years later, they're like, oh, geez, I got to get back to work on this. I know I missed that huge opportunity with that one particular window because I wasn't focused, blah, 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 blah. So, that's my feedback to you. But I even gave the level oneers a challenge. And I said, this one person's like, well, to make a half decent amount of money, even minimal money, you're going to need some serious capital to work with. And you're right. The key here, though, is that what we want to do is teach that process, rinse and repeat, and have your money compound. Do you need to have a part-time job or a second job just to make sure the damn rent is paid? Absolutely. You can't mix the two. It just doesn't work. Having said that, and this is the great part about the market, is if you do just run that small, I'm looking for that 20-30% return consistently year in, year out, then every once in a while the market hands you a treat, and all of a sudden, boom, something goes 10x or 100x, and you totally didn't expect it, and then all of a sudden the whole fucking game changes. And that half of that is just simply being at the right place at the right time. And I can tell you right now, I don't see this as the right place and the right time for that home run hit. There are times in the marketplace where we get that. But for now, what you really need to do is concentrate on just getting this process down solid. And, this is a profit-taking window time of year. So I don't think it really makes sense for a lot of you to be going and risking your hard-earned money in the marketplace now anyway. Buy when it snows, what time of year that is. You down under, of course, it's the exact opposite. But I made a challenge to the level oneers. Grim, our instructor, says, look, don't risk your hard-earned money until you've done at least 100 of these paper trades. And frankly speaking, I think that's wise. For those people that are super, super, super insanely motivated, and I do see, those that are like, fuck it, Brian, I'm here to learn, I want to get this down. If you can show me 20 paper trades of a particular setup within a trading plan, and every single setup is done without mistakes, and you properly executed both entries and exit, losses and profits, I think you can move on to your next 20 trades, 1/10 account size trades, and then ultimately you're up and running by the time you're in sort of your 60 trade set. That's a good 50 trades, but this is for the guy or girl who's like, Brian, I'm not here to fuck around. Here's the spreadsheet. Here are the trades. Here's the exact entry. Here's the exact exit. Here's the win-loss ratio. Here's the net profit margin. A lot of you level oneers, you're just getting to the point where how do I build and log this spreadsheet and what fields should I have in here? So you can't consider those part of this kind of thing. This is, you're at the point where you know what the setup is and you're ready to actually start, running your small business. But If anything, I really like Grimm's insistence of 100 paper trades. And if anything, I like that because the first 40 paper trades you're going to do are probably going to be garbage. And that's okay. You got to learn this process. It takes time. It takes practice. So I put a challenge out. Hey, you want to take me up on it? I challenged the level 1ers. I said, someone show me a spreadsheet with 100 L-tangonators or 100 bots, and all of the levels are clearly marked out. And if you want to show me a stake of like $10 trading in crypto, and you appropriately took 50 cents risk, right? Find no more than 5% of your portfolio on one trade, and you show me 100 paper trades building that $10 up, I told them, hey, I'll give them 10 G's out of my own pocket to trade to get them going if they can demonstrate to me that discipline and patience. So, that's my point that I have to make here for you guys in the level 1. I know you want to go and risk your hard-earned money, but you're actually in a very dangerous, I don't want to, because as soon as somebody goes, oh, TRI prop firm, I don't want to open up that can of worms. This is nothing to do with prop firms or anything like that. That's all legal shit. I'm just challenging the level 1ers. If somebody can actually show me that, I'll take you under my wing, because you've demonstrated the hardest part of this whole business, and that is patience and discipline and perfection. I mean, that's hard work. That's the hard part of running a small business of trading. So that's how serious I am, guys. Like, seriously, if somebody want to take me up on that now, you can't back test these. These all have to be in real time, and I want perfection on that spreadsheet. So if somebody wants to take me up on that, and you're in the level 1 program, give me a PM. Okay, so little commentary on where the level 1ers are. Like I said, get those 100 paper trades under your belt. And even today in the group session, I did hear people starting to say things like, I need more examples of the bot. So you can't even tell me you're even taking one bot setup validly if you're still at the point where you don't understand the setup. So the gauntlet has been cast, and I challenge everybody to do what our instructor has asked of you. 100 paper trades. Okay, a little bit of a rant there. Where should we go next? I know the level 1ers have a Q&A document, so I think I'd like to attack that. So if you don't want to listen to this, you can sort of 2 times speed or whatever. We'll get through this, and then maybe we'll do like a quick market commentary and frankly speaking, I don't see anything to get too excited about in the big boys and the little altcoins. They're just doing their thing. Banged off a huge win this weekend. It's kind of fun. Okay, so questions. If the stupidity of the Willie, meaning 13 EMA, you're killing me here, is below or above 80-20, respectively, is a really strong signal. Why do we consider the 21 plot itself? You don't have to. You can get rid of the 21, the underlying indicator. It's totally fine. I know some people, very easily do that. You want to just keep this line. Where's a good one to show you? I don't think actually one that has all of them on it. Here we go. You want to I'm gonna have to refresh this. Fudge. This is my RSI study. We haven't looked at RSI in a while. But you want to minimize the 21 line, and just use the EMA as sort of your signal that this market is officially overbought or officially oversold. Something like, let's get rid of that. Totally fine by me. In fact, what's so cool is people on the site have actually created scripts that change the background color of the chart when Willie does go stupid. Just sort of a heads up. Don't go and buy me here. And sure enough, down it goes. Don't go and sell me here. Up we go. Don't go and buy me here. Down we go. Actually, I don't know whether we went stupid there or not. No, not quite. Oh, here we went stupid. Don't go and buy me here, you stupid. Down we go. Anyway, just Brian having fun. I'll tell you, it's red, green background should be switched. Yeah, well, anyway, the point here is that there are, and, just check on the site. A lot of people share the scripts and stuff. I think Shark Toshi, he's master script guy. He's probably got a script like that changes the colors. Kevin, too, I think he also likes using that. I know Sjord does. And I don't know whether I'm allowed to show you, but this is so cool. Sjord's probably going to get upset at me. But this is the chart interface that Sjord is working on right now. So TRI is going to be like just awesome charts. Look at all these, so you can get like all your scan results all in a nice little package in your email every day. Super stoked. So that's what's coming down the pike. But I'm not allowed to show you guys that. Should keep that quiet. So, I mean, the irony of it all is that down the road, I probably won't even be using TradingView that much because Sjord's building the engine to take us to the future. Thanks. Yeah. Why do I have to feel like I gotta get a polite message from Sjord? What are you doing? Oh, well, not like I can hide that. I mean, anybody watching Broiler Chicken Show, I'm so dead. Okay, so let's get on to these questions. I mean, if you want, you could get rid of the other plot and just follow the EMA. Totally fine by me. And this should be EMA. Remember that. Wouldn't it be better just to uncheck the 21 period and leave the 13 EMA? Oh boy. It would give us a sharper signals, or taking a trade based on the stupidity of the 21 period, even if the 13 was still a good signal. Thank you. Yeah, I think on balance you're perfectly fine. Remember, we're not here to teach you how to trade. Did that sound right? No, that didn't sound right. Somebody grabbed that soundbite. We're not here to teach you how to trade exactly like Brian or whatever. I can teach you the setups that I like, but ultimately what we're here to do is show you all these fun little tools. Hey, here's a cool tool that Brian built when he was a broker that helps him see when the market's overbought or oversold. That's really all Willie was built to do. I wanted a moving average. I wanted something that was nice and slow and that doesn't get overbought or oversold very often. I mean, you can see overbought. Never, we haven't even really gotten, say the last time we were oversold was way back here in oh, gee whiz, March. Did something happen in March where we should have probably paid attention when it was oversold? So that's the best part about this indicator, is it's nothing more than just a tool to help me see overbought, oversold. Now it's awfully hard to see on this chart. I think, like I said, right? Don't buy up here. Don't buy up here. I don't think Willie is enough unto itself to justify a trade. And of course, at TRI, we never want you to take a trade off of one indicator anyway. But if I start getting signals that the market's overbought, and I get signals of momentum divergence, well, holy jeez, I better not buy. And sure enough, probably cooling your jets through this was a good idea. And you wait for Willie to get out of overbought. Ideally, we'd love to see him get oversold, but now we're starting to get bullish divergences. Okay, whatever the danger was here, that's kind of abated now. Now we have this bullish divergence working. We should probably just cool our jets if we're bearish. And maybe even start to see if we can justify reasons to take long shots. So you can see there was this little double bottom that came in. We're just tracking how that's doing. My hunch is this probably pushes up into new highs. The momentum indicator does not go to new highs, and we create a bearish divergence. And we just go back and forth, back and forth. And this is basically what violently flat looks like. And I put out tweets and stuff. There was news articles about a month or so ago where a lot of analysts kind of like this kind of thinking violently flat. And this is actually what violently flat looks like, kind of boring. And I even see, you know, like especially for the Bitcoin maximalists and stuff like that, you can kind of see the overt, over-the-top bullish nature and enthusiasm. It's kind of waning from the market. I do see, you know, for example, holy jeez, we got 58 people watching this video. Well, hello, all you 58 people. 2 downvotes already! What the hell did I say to justify a downvote? Baffling. Did I say it? I mean, you guys here in the lounge, I just look over at this and I go, wow, 2 downvotes. I mean, what on earth did I possibly say to generate a downvote? Did I say something controversial? There's really, I thought there was 2 words. Oh, I remember I said, I said, we're not here to teach you how to trade. So obviously that's what generated the downvotes. Oh, God. Silly YouTube. Anyway, you 58 people, if you are enjoying the frivolity here, please extend us an upvote. And actually, I watched it, and actually, I don't even know whether I'm allowed to do this, but I'm going to do it. Anyway, I finished that conversation about Willie there, right? Stupidity? Hopefully I did. But what I did want to show you guys, which is so cool, but I don't know whether I'll do this now or later, but I'm going to do it now. If I don't play these videos, I don't think I'll get into trouble. But this kind of what I was watching through the weekend. Videos on China's empty cities. Fascinating. Absolutely incredible. Like whole cities that just they don't have anybody living in them. Completely developed. It's shocking. So that was fun. I like to watch videos and stuff about, you know, ancient Egypt and all the cool sort of old like technology we can't even comprehend right now. It's just sitting out there right out in the middle of the desert, right in front of our faces. And people don't want to acknowledge that there were higher, more intelligent societies on Earth before us. But anyway, this guy's actually really good. I like listening to him. Very down to earth. And I better not play it or else I'm going to get into trouble. But where's the picture of him? There he is. Really down to earth. Very level-headed guy. Really frank conversation about the real estate market right now. Super cool. I like listening to him, and frankly, it's not a bullish comment right now. So I like listening to him. He's not a bad guy. This was the guy I was trying to tell you guys about in the was it the daily, or I guess it was class on Saturday. I really wanted everybody to in class on Saturday, and I just couldn't find the video. It's weird when you go through all the YouTube feed, and I would imagine my video feed it must be impossible to find. But I couldn't get this guy's videos. See, I think he's a very intelligent guy, and it turns out that he worked on the street here in Vancouver same time I did. But he's a guy who actually lived up to his sort of career aspirations, and the guy that he's interviewing here, that guy, he has like $3 billion in financings and stuff for mining companies and stuff, so super smart. But I wanted everybody to watch this video, and I think I even retweeted it out because it was so cool. Because it's a great analogy of when I was a broker, and I even said this. Yeah, he is. So that's another reason for you guys to like him. Omar says he's a Bitcoin bull. I know, but I don't want to get into trouble with copyrights and all that shit, so I don't want to play any of these things. I'm just showing you the screenshots. You know, do your own due diligence, whatever. But you know, level 3ers, this is the video I wanted to show you, because this guy... What I think's going on in the world right now is, I think to a certain degree there is actually a war going on right now. It's an economic war, and it's probably also like a digital war, and I'm sure COVID is wrapped up in this somehow. But I definitely think that there is a de facto war going on right now, and I think that the shots were fired there, like through the crude oil market, driving it to negative numbers. I think that was like sort of one of the battles in this war. And he makes an interesting comment about if you are invested, maybe you're a gold bull, whatever, silver bull, a rare earths, which is probably the smartest mining sort of proxy right now because they're in such high demand. If you're investing in that space and you're investing in those companies, be damn careful where the hell these companies' properties are. And I always say to my students, and I used to always say to my clients and stuff, it's your money. I mean, you worked hard for it. You paid taxes on it. Maybe it's in a registered account, so it's ready for your retirement. Where you put your money to work in the world, that's your choice, right? So, maybe take a real good look at what companies you're investing in and where their properties are. And this gentleman just simply makes the argument, you can actually draw the battle lines right now based on the countries that have established swap lines and those countries that don't. And the countries that don't are the countries that are not basically guaranteed by the U.S. fiat hegemony system. In essence, the countries that don't have those swap lines, there's no guarantee to their currency base. And this gentleman's suggestion, and unfortunately a lot of the gold in this world is actually you got that? Yeah, don't put the Egypt one. I mean, thank you, Shark Toshi. Sharky's just going and posting all the videos in the lounge. You can watch the Egypt one, but it has nothing to do with the markets. It's just me wasting time. Thanks, Sharky. I love how these guys, they all have my back here. They just slowly work in the background to support me. Thank you so much, guys. Anyway, back to our story. So this gentleman, I think this is an excellent illustration of this sort of the battle lines. The battle lines have been drawn, and are you part of one of us or are you part of one of them? And I think the us is anybody who has a swap line established with the U.S. Federal Reserve. Them, you don't. And his basic recommendation is, if you are in one of those countries that doesn't have a swap line, you might find that the country itself nationalizes your property because they need that hard physical asset, the gold or silver or whatever it is, to actually prop up their local currency. So be very, very careful of that right now. I thought that was a really, really good, it's sort of, we in the public, we sort of get told one message about the way the system works, but really, in my eyes, what I saw in March and April was literally the entire floor fell out of the capitalist system, the Western capitalist system. The floor fell out. When I saw all the international currencies all just basically go into nosedive. You look at the Australian dollar, the Canadian dollar, they literally went parabolic down. And I think actually the Canadian dollar, I think it might even have hit 50% of its peak. So Mr. Gann's probably happy now. Anyway, so level 3 years, this is the video I was trying to share with you, and thank you so much for posting that in the lounge there, Sharky. And anybody out in the public, I would really suggest you listen to this to try and understand the way that the system actually operates. Really cool. And then this was a really cool video. I gotta say, there's a few videos that have been shared in our community lately, and some of them have just been absolute gold. And I got to tell you, this is a piece of gold right here. This gentleman here, Richard Werner, I think, I don't know who's who. I'm so stupid. This guy's like the smart guy, right? I can't remember what his name is. And this guy, and also too, it's a great way if you. this is Brian being facetious. Look at the size of these guys' heads. I mean, look at that forehead. Do you know how much brains are packed into that guy's head? And it's all right in that cerebral cortex. I mean, these guys are smarty smarts. Look at this guy's head. Look at all those brains stuffed in there. I mean, these guys, they're super, super smart. In fact, look at, he's so smart, he's even got like an extra part to his brain up top there. Anyway, that's me being facetious and silly. A fantastic conversation these two had. Like, literally, these are people who understand the system, the way the system works. And when a little disappointed that I saw, and I did see somebody even posted one of Peter Schiff's videos. And okay, it's fine, Peter's economics and stuff. But when he was pressed, like he did an interview with Joe Rogan recently, and Joe Rogan asked him a couple times, okay, what's the solution? How do you solve the problem? How do you solve the problem? How do you solve the problem? And Peter couldn't give him the answer. He just said, the whole system's fucked. At least these guys, they understand how the system works. And, like, this gentleman here, he's the guy who actually came up with the term quantitative easing. That's how smart these guys are. This is the guy who came up with it. I got a nice screenshot of him there. This is the guy who actually, is it worth your while getting to know the guy who came up with the term quantitative easing? I think so. It's probably worth your while. He coined the phrase back in the 1990s. Isn't that incredible? So, anyway, point of the matter here is, I think, and I guess that's this guy here, Richard Werner. And actually, I'll probably watch this when I'm done with you guys. But I have to say, this guy is super, super smart. And he understands the system. So listen to him. And if you have to listen to it maybe 2 or 3 times, it's probably in your best interest. He understands the system and he understands the solution. And you know what? The solution, all you crypto kids, is DeFi. Which he doesn't say DeFi, but his solution to the problem is the 20th century's version of DeFi. What you guys don't understand is DeFi is the 21st century solution to the problem. Fascinating. Like, when I made the connection there, I was like, holy shit. And it's fascinating, too, because the problem here is too much centralization of authority. And ironically enough, even though we in the West, we believe we won the Cold War, ironically enough, our society is actually heading full steam towards becoming Sovietized, which is hilarious. Again, you have to watch this guy's interview. It's beautiful. He's so smart. It's incredible. And this actually opens up a really interesting debate about the role of the Federal Reserve, because in essence, what the Federal Reserve would like to do is put all banks out of business and be the only bank. Ironically enough, if they can pull off this Federal Reserve currency unit kind of idea, and the ECB is even further along, scares me when you listen to this gentleman and his thinking about the ECB. But if they can pull off this digital centralized currency, then they have basically put all other banks out of business. They are the only bank, which is fascinating because the United States banking system, he was even saying, pre-Great Depression, there were like 30,000 banks. How the hell do you control 30,000 banks? Well, the easiest way is let's go create a bubble, right, and get them all to lend a bunch of money, and then let's just crash the market. And so all of those banks go bankrupt, and you have to get our deemed insurance and, kind of think swap lines, but internally within the United States from the New York money center banks to keep yourself afloat. And then, of course, that's got the politicians involved, guarantees, blah, 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 creation of central bank, blah, blah, blah. Anyway, point of the matter here is they've pretty much achieved their objective with destroying the banks, these central banks, which doesn't make any sense, but you have to watch this video to really understand the system. And now the Federal Reserve banks not only do they require banks to hold reserves with them, but so which puts the bank itself at a disadvantage. It's like, in ancient Japanese society, the way that one daimyo would control a lesser daimyo would be the lesser daimyo would have to send either a daughter or a son, and they would be held as hostage or a guarantee, right, that the lesser daimyo would not do anything foolish. You might argue that the Federal Reserve System itself is very much along those lines, but what's fascinating now is the Federal Reserve itself is actually going into competition with the banks. It used to be that the banks lent the money, and the Federal Reserve act as a regulator. Now the regulator wants to actually also be your banker. Fascinating. I mean, again, you have to watch this video, especially all TRIers. This should be required watching. And more importantly, if you actually understand the way the system works, I'll put the link in the lounge there. And hell, I'll even give it to you guys here in the YouTube video. So good. I gotta tell you, man. So good. And just look at the picture on the front there. I mean, these guys, their heads are stuffed with brains. I've got a small head, so I'm not that smart. Look at the size of this guy's forehead. It's just me being stupid. Sorry. You know what? I'm never gonna get invited on their show. But really, really great stuff. I wanted to bring that to the community's attention. So, some videos there to watch. Understand the swap lines and the way the battle lines are being drawn in the world right now. I kind of like this Kawasaki guy. I think he's got a really good attitude, and he's a Bitcoin bull. So hey, what the hell? Throw him a like or whatever you're supposed to do on YouTube. I really like this guy for a nice, clear read of the real estate market. I think this guy's got he's got a good head on his shoulders. And it's not going to, he's not going to blow smoke up your ass. If anything, kind of like me, right? He's like, okay, I'm going to say something right now that's going to generate a whole bunch of dislikes. So watch all the thumbs downs go up right now. It'll say like, most realtors are lying to you to your face. And then brrr, the half a dozen realtors, they all crank up the dislikes. Anyway. Hit the like button, hit the subscribe button. If you feel like Brian's actually giving you something of value here today, make our day a TRI, blah, blah, blah. Okay, let's get back to the questions here. So, on balance, you're perfectly fine. If you want to just use Willie as an overbought, oversold indicator, just using the moving average, perfectly fine by me. I mean, of course, Willie in itself, you should be able to see things like market structure. You should understand the significance of oscillators going through the 50 line. And really, you want something really mind-blowing, if you remember our conversation back to RSI and the introduction to technical analysis. And also, too, when we introduced you to the Williams percentage R oscillator. For fun, go and check out what the market does when the 13 EMA crosses above and below the 50 line. That's also a really cool application to this tool. So there's some more stuff for you to think about. But really at the end of the day, what needs to happen here is, of course, we've given you this overbought oversold indicator in conjunction with the MACD histogram divergence tool. You now have a great way to see price momentum that's heavily overextended, either bullish or bearish, and the market's actually telling you through divergence signals that it's actually much stronger or weaker than what price would lead you to believe. Put the two together, and they are an incredibly powerful momentum tool, and that's why I wanted to teach you in the Level 1 program the use of the two tools together for analyzing price momentum. Okay, review a bot setup. I mean, you can find them anywhere. Really, all it is here's a one that's working away right now. This is ICX versus Bitcoin, Icon versus Bitcoin on Binance. Where you trade is entirely up to you. This is an interesting adaptation of one because when I saw this big spike off the bottom, which feels like a base, I mean, you can see stab down railroad tracks. Clearly somebody doesn't want this thing to go really much below that level. And then notice they did it again, stabbed down into that level, probably ran some stops, then another railroad tracks. There's something going on at this level, you know. So here we are coming back down into these levels. They did it again. And then lo and behold, off of that level, woohoo, just a big old rally. Yeah, he didn't. I mean, the really sharpshooter traders might have been hunting this cute little W here. I'm not going to say that's easy to do. But, you know, you see this big pop-up. Wow, what a move. And you're kind of like, okay, well, you know, it sure looks to me like this thing's bullish. Looks like it wants to go up. How am I going to get in? There's a number of different ways to try and get in. If this was, you know, there are two different perspectives. There is the range perspective, and probably a good example of that would be like that, where, actually I think it's the same one. Yeah, there it is. So here's like a good range perspective. Top of the range, bottom end of the range. I'm going to try and sneak in. You know, you see the market rallied up to the top end of the range. I draw my reload zones off of this entire range. I let the market come down, test the bottom end of the range, and I'm going to try and sneak my way in off the bottom end of the range. Okay. There's nothing wrong with that whatsoever. But if we're seeing bottoms come in near the bottom end of the range, then, you know, really we should be expecting a test of the top end of the range. It's a range. If, however, you know, and you might even argue like through this, if we're transitioning from a ranging market back and forth to now maybe a trending market, then we're thinking about consolidation, not at the bottom end of the range, but actually sort of like, ideally we would like to see it near the middle or the upper end of the range. So you can't use reload zones here, but you're thinking, you know, man, I hear all this bullish talk. I hear, you know, that Crypto Chico guy is just like, I'm going all in. Da Vinci is selling his house and he's loading up on Link. No, that's something else. Sorry. Anyway, I don't know. I mean, these guys are all bullish. I got to somehow get in here. You can't RLZ this, so what the hell are you going to do? Well, maybe you take a look at this price action. This really isn't the best example, but, I mean, remember, I'm going to teach you how I like to trade. And remember, Brian's a chicken shit. I mean, everybody just remember that. Get used to it. I like to have lots and lots and lots of support for my idea. But, you know, let's just say hypothetically, you're like, you know, Brian, I want to get in on this thing. How am I going to get in? Well, you know, really that's a little too big, but we might go, yeah, maybe something like that. Oh, that's too small. How about right in here? Hey, there we go. We got a nice base to work with. That's a nice W. Okay. So I've drawn sort of one leg, and in this case, it would probably be there to there. I can't reload zone this because you can see we're a million miles above the reload zone. So how am I going to try and sneak my way in? Well, maybe this market might be like sort of like AB after the consolidation CD, which gives me sort of a move up top. So, okay, here we are here. I'm thinking I want to get in. This thing's bullish. Got to figure out a way somehow to get in. Okay, well, if I take this range here and I see it's okay, well, we've done a nice consolidation. That's about 50% of that range. Maybe what it's going to do is do this old sort of, you know, higher highs and higher lows. I'm a bull market kind of thing. So I'm going to take this range, and ideally you want to identify the range where whatever the correction is, it's at least 33%, but it doesn't go beyond 66. So in essence, and you can kind of see, this was probably nothing more than just classic WD GAN, 50% tag of this up move. There's the base, the W, down, up, down, breakout. So there's the end of the move. You can see the M, and this is the 50% retracement. WD GAN 101. Nice, simple stuff. So we did 33, didn't go beyond 66. All right, well, let's take this and clone this now and maybe think that sort of A, B, C, D. So I'm looking for, I remember, I'm bullish. I want to get long. I've got to somehow figure out a way to get in here. This way, if I do up the bot levels, now I can start hunting some sort of way to get long here. And if I do hunt the bot, then what I'm really saying is I can identify risk and I can identify rewards. And ideally, if I take this trade and follow the model, if I'm right, my reward will be bigger, 2 to 3 times bigger than my loss if I'm wrong. As I said before, I'm chicken shit by nature. So Brian, ideal bot, I want to see, 1 low, 2 lows, 3 lows. I mean, give me lots of defense, right? Everybody on YouTube, everybody in level 1, what YouTube and the public, what do I like to call these levels? Anybody remember? All you YouTubers, this is for you. I mean, in the school we call it slightly different things, but it's the easiest way for you to think about this. Am I still connected? I have no idea. Good, Colleen. Excellent. I would expect that from you. No, keep it simple, Julie. Pascal. Keep it really simple. Right? I want you to think visuals. Think. Remember I remember when I was in university and I had to cram for final exams, I took this silly memory course and it was a total waste of money. Kevin Trudeau, I think was his name. Total scammer. And he went on later on in his career to do infomercials and stuff, like a professional infomercial guy. Anyway, one thing that I did take out of his funny little course, which actually works, is the way that you remember things is you have to associate action. You have to associate movement. And it has to be outlandish. So that's half the reason why I have all these crazy names and acronyms and stuff for these concepts. Is it's easier for you to remember if you remember all my crazy things. So Andrew got it. Zoc Nix got it. Boo hoo 007 got it. So that's good. Think in our class program, of course, the official sort of textbooky term Brian likes to use is institutional fingerprint, or in essence, the market came down, and I suppose you can even use any of these really. Market came down, and somebody through this candle said, no, you don't go down, you go up, i.e. somebody bought here. And sure enough, whatever the buying was here, it stopped the bear and market turned back up. So we like to call these institutional fingerprints. In essence, remember, public buys up markets, institution buy down markets. So this clearly is some big player saying no more down, you go up. Or think of colorful illustrations. Market came down and somebody went, no, what the hell are you doing? Get your ass out of there. And you can think of all of these. That level there, this level here. Look how clustered they are. Clearly, in this area, somebody does not want this thing to go down. Comes down into these levels, and somebody goes, no, get your butt out of there. So, the more no levels I have, the more comfortable I am in a trade. Remember, risking your money in the marketplace is all about stress. You guys on the site, they all love to comment about how young I look for my age. Well, half of the reason why I look relatively young is I try to set myself up to live as low a stress life as possible. Then I go have a kid with severe autism. I have a wife with mental illness who succumbs to her problems. And, of course, life gives you stresses in other directions. So when it comes... do I... I don't think I do, though. I think I have a pretty small head. Good comeback, though, Khalid. Good comeback. A deer after my own heart. Anyway, point of the matter here is I like to have a whole bunch of na-na-na-na levels when I race. So if I looked at this, I've only got one na-na-na-na level. So I'm kind of like, I don't know. But... I mean, let's call a spade a spade. Who can tell me what this 3-bar candle pattern is called? Maybe you can zoom in on that. And it's a perfectly valid candle pattern. It's there. It's there. It's square. Get used to it. No, I think the saying goes something different than that. What is this 3-bar pattern? Bang, bang, bang. Reverse Vader. There you go. Well, one candle. So even better, PMA Bull Alex. Love that name, eh? PMA Bull Alex. Now that's an optimistic guy. I like it. But, I mean, this, you could say that's a hammer. Actually, we should zoom that in a little bit more. All right, something like that. This 3-bar pattern, I love these bar patterns, and it's kind of hard for new people to trade these patterns because they're very difficult. But in essence, think of the Empire State Building in the great state of New York. Sort of looks something like, well, maybe after COVID it looks like that. But that should be a straight line, right? So, boom, boom, boom. Think of Empire State Building. It sort of looks like that. Not really. I'm a terrible drawer. This is an upside down Empire State Building where boom, boom, boom. This is called a fractal. This, a trade above this level right there, is a buy signal. So, you know, maybe you're a super gung-ho trader and you don't like all the na-na-na levels because that's where all the punk-ass bitches like Brian are. Fine. You know, I'm not here to tell you how to trade. I'm just here to sort of set the table for you guys. So maybe you're an Empire kind of person. 3 crows? I don't know. Isn't 3 crows like 3 red candles in a row? I'm not quite sure if 3 crows is right. But I was referring to this. Boom, boom, boom. That's a tough one, K2 domes. You might be right. I can't visualize 3 crows in the top of my head right now. Anyway, this is what's called an empire, and of course, you know, for new people to trading, this is an impossibly difficult trade to take. There's the hammer, same sort of thing. I mean, that's up to you. Like I said, I like 3 lows because I'm chicken shit. Whatever. Point of the matter here is if you were a slick trader, you could use the bot levels where this would have got you long. Your risk, of course, as you can see, and that's the whole point of the bot, is it forces you to ask yourself, well, if I'm going to take a trade, can I get paid $3? That's the whole point of this, right? And ideally we want that as close to 3 to 1 as possible, right in there. Can I get paid $3 if I'm right versus losing $1 if I'm wrong? That's the whole point of the bot. It is a level system. If you'd like, you know, you've identified the bot levels here. And if you're kind of like, well, you know, Brian, I really like having multiple lows, na-na-na-na levels, then you don't touch this. It's just not your trade. If you're like, well, Brian, I like the bot levels, but I have to see indicator confirmation. I have to see beautiful, maybe a divergence on this move here. I have to see W's in my indicators. I have to see Willie is stupidly oversold, like that previous question. Okay. It's not like there's a right or wrong to do this. Just understand that the more reasons that you build into your trade setups, the technically the higher the statistical probability. We had kind of an interesting conversation on the site recently about price risk versus information risk. This isn't the best example, but price risk guys, they're just going to come in and buy levels. Kind of like, maybe this is a mountain man, right? 61.8. So, there are guys that I used to work with, very, very smart traders, made a lot of money. Oh, just missed. But, if that had come down, stabbed 61.8, I can tell you for sure, a guy like Mountain Man, Brandon, he would have bought that level. Just no ifs, ands, or buts. That's high anxiety trading. You want to add in, various rules like, well, I'm not just going to trade a stab at that level. I'm going to wait for a W. Well, that's giving you a little bit more information that maybe a bottom has come in. But you're going to forego great price levels for information that, in this particular case, if you're waiting for information like the Empire, well, that's going to get you in a little bit higher, right? Versus the price risk guy who's just buying that mountain man level, he's going to get in at a hell of a lot better price. So think of the bot as a way. If you see a bullish continuation pattern, you're just trying to get into the trade. Now, you might build in your plan that I take 3/4 profits at the bot target level, and I move my stop to scratch on that remaining quarter, and you're still in this one trade. You're still in this. That's your adaptation of the bot, and that's ultimately where we have to get you. You can, I'll teach you these very simple models to help you participate in the market, but ultimately what has to happen, think 100 paper trades, is after a while doing this, you're going to start putting your own personal flair. Well, I love empires off of bot levels. That's 2 reasons, right? This is location, the bot, trend continuation, and now this is price action, market structure. Okay, well, you're 2/3 of the way there. Maybe this happens through a kill zone. All right, awesome. I got my 3 reasons. Time of day, liquidity pool, location, structure, go. Maybe you're an indicator guy. All you guys in level 1. And let's see, is anybody here in the chat that's in the level 1 program? What does Brandon think about indicators? I tried to tell you guys this ad nauseum. There are some people in this world that hate indicators. You show them an indicator and they will puke on your face. Get that fucking shit off the screen. I can't tell you what's going to appeal to you. I can't. I can show you all the different tools. Everybody on the site knows what's Julian's favorite indicator. He eats, drinks, sleeps, and dies by it. Nothing? Nobody? Julian loves his Julian SI. There you go. Bubble tea. Yeah. So anyway, the point of the matter here is that this is just one example. Here, for example, this is a more of a range kind of market. So we can't think trend continuation. But in a ranging market, I want you to learn reload zones, and you can see the W's. You got an indicator signal in there, away you go. That is like L Tangonators. If we're in a situation where you're kind of up near the top end of the range and we haven't done anything near reload zones, well, maybe you can think trend continuation and start drawing out bot levels on how to get in on trend continuations. I showed you there a few minutes ago to start off this conversation. This is a really interesting adaptation of the bot in that we had this big spike off the lows, and when I drew the original bot levels, of course, the rules are 33 to 66. So when I did these levels, you can see this went way beyond 66. So I don't think this is an ABC going here, but Now, this is just an interesting adaptation. We'll see what happens. Remember, you got to do 100 paper trades. Maybe you're going to say, well, you know, Brian, what I've found is that institutional players like clotheslines much better. So I'm actually going to do my analysis off clotheslines and draw my bot levels off of clotheslines. And here you can see, well, basically that was 66. And notice how the market actually put in a pretty well-defined structural bottom right off the bot entry level. So again, this is the trade location tool, the bot tool. Then you're going to look at price action. Are you, the inverted head and shoulders? Are you the empire fractal type trader? Are you the chicken shit? Brian's a pussy. Got to see 3 na levels before I consider risking my money. That's entirely up to you. You want to be a pussy? That's cool. Come be a pussy with me. There you go. Somebody get that soundbite. I used to go to a boys' boarding school, right? And and it was weird. They just started entering girls into this school, and I remember guys used to sit in the back of the class and just sit there all day and just go, "I like pussy, meow," just to piss the girls off, and just do it over and over and over. How many times can I say meow? Where's Shane? I need Shane here. Actually, it was really cool. Yeah, exactly. Just as long as you word the words and say the words in the correct order, technically you're not swearing. Actually, I had a really cool dinner with my local trading buddy Andrew here yesterday, and actually I showed him a way to just simply go through. Somebody just asked there on YouTube, can you define clotheslines? All I did was I just took the charting tool, right? A lot of these charting sites default to like candlesticks. Believe it or not, I first learned how to chart and trade using bar charts. Isn't that kind of a fun image? Candlesticks became really popular in the 80s and the 90s, especially with computer programming, being able to automatically draw them. But all clotheslines is just think of, you see this green candle here, it closed at that price. That was the last trade for that bar. And then this is this one here, that one's that one there, that one's that one there. So you just change it to a clothesline, and all it does is it just prints where the candles close. It's really simple. It's not difficult. Anyway, point of the matter, and for whatever it's worth, Sean, most institutional desks, they actually don't even give a shit about high lows and stuff like that. In fact, quite often what ends up happening in the market is these are trap levels, right? All this up here, these are all the retail public buying at stupid levels, and they're all trapped. And if I was going to short this, I would really concentrate on that clothesline level, because that's the level that if this thing actually does close above that level, that's going to represent a big W. So if this isn't a bull, then you know damn sure that the institutional levels are going to come in and defend that level. Does that make sense, Sean? So clothesline levels are really, really important. I'll tell you, it's a really cool tool to identify trade location. I mean, even down here, right? If you would come in on the buy side, right down at these candle body lows, well, you had a little fuck you there, but on balance, at the end of the day, you really didn't take too much heat. Same thing here, right? This was all these trap bears. If you would come in on the long side anywhere down in here, that actually was the next bottom, right? Now you can actually draw a W. What do you think the odds are that this W probably comes in right off that clothesline level? Well, actually, it's a little bit higher. You can see the little W down in there. And, that's the bottom, right? And interesting, you can see on the next fuck you move, they're literally setting this level up here. See all these clotheslines and these trap bears down in here? This is, in essence, they're setting up the next FU event window right there. They'll probably dip it into these tails, and any bears that were trapped here, they'll get released. But my hunch is the next FU level is sitting right there. So watch what happens when I change this to a clothesline. You'll notice this price action completely disappears. poof, gone. And all you see is a pretty little W. See that? So the institutions, all they see is a W down there. They don't even see that fuck you candle. So, anyway. Hope that helps. All right, let's see how we're doing on the questions. So, what do you think, guys? Did I do a good job reviewing the bot there? And remember, anybody's in the education program, we have, video tutorials, everything. You just got to go and watch this, right? I put together not only an illustration step by step by step. You just, well, this is a bearish one. I think we also had a bullish one on here. Bearish. Oh, yeah, there's the bullish one. This is an example from crude oil, if I'm not mistaken, and I just literally walked you through step by step by step by step by step. And add insult to injury, I did a video on this. That's like 25 minutes long, going through step by step by step by step of this trade setup. So please go and watch the video. And watch what I just did there maybe a couple times over. That should help explain the bot and why you would use the bot, right? Is the market at the bottom end of the trading range, right? If you're thinking about buying, right? Problem is you guys never showed us how to use the lounge at the beginning. How to use the lounge? I don't quite understand that, Omar. Good question, though, I guess. Maybe you can expound on that a little bit. All right. Okay. Omar, was this you who asked this question? Did I answer it? Did I give you a further illustration of how to use the bot? Bot for the fun of it. Bot for the fun of it. Well, I guess that wasn't you. All right. Well, hopefully we'll move on here. And Trader Mikey says yes. Maybe that was Trader Mikey who asked that. Okay, let's move on here. I've noticed everyone in the lounge talking about ECB conference that happened Friday morning, New York time. In the hours before that, there's been quite a big crypto dump from what I could tell, which might have been linked to the Twitter hack. Could you, or maybe Brian, during the BCS, give us an overview of what that conference meant to the marketplace? I'm not sure I understand the fundamental factors to get out of this news. Okay, it's that this is more sort of like big picture macroeconomic kind of thinking. Okay. Remember we and maybe go watch that video on the swaps industry, and in essence the central bankers, the club. Okay, Omar, I hear what you're saying. Maybe that might be a good idea as part of the level 1 program, is to do sort of a site walkthrough. And actually we've been waiting on Sjord and his development team before we really did the site walkthrough videos and stuff like that. So I hear what you're saying, and that does make sense. Okay, so back to this question, and I appreciate your point there, Omar. That's well taken. So if we take a step back, and again, this is those videos that I was telling you guys about earlier. This is sort of big macro, big picture, world hegemony, that kind of thinking. I do believe to a certain degree, world hegemony, post-Cold War world, that the world is in essence run by 3 money centers. The Japanese central bank, the U.S. central bank, and the European central bank. And de facto, ironically enough, I think probably most of them get their marching orders from the Rothschilds out of the Bank of England. So if we understand that the world operates in this sort of, think of like like a tricycle or like a stool that has 3 legs to it. Um, Really, it's just a question of where's the capital flowing. Is it flowing towards North America and the U.S. banking system? Is it flowing towards Europe and the European banking system, or is it flowing towards Asia and the Japanese banking system? And interestingly enough, that gentleman, the yen, what's his print, the princes of the yen. You could make the argument that the Japanese central bank, to all intents and purposes, is controlled and owned by the U.S. after the fall of Japan in the Second World War. So if we look at it from that perspective, then really, ironically enough, the whole global sort of capitalist system, which of course everybody outside of the system hates immensely, but in essence, you could make the argument that the whole capitalist system is really predicated, number one, on what this thing is doing. This is an index of all of these international currencies. And in essence, what we saw there in March was all the international currencies started to fall apart, and the U.S. Federal Reserve had to step in and guarantee swap lines. In essence, anything that's in this U.S. dollar index is basically part of that buddy-buddy group, fiat currency world, all that kind of talk, and it's guaranteed by the U.S. government. If the U.S. government falls, then that whole fiat system collapses, and probably the entire sort of Western civilization, the way that we see it, it probably collapses. There's a lot at stake here, folks, so my hunch is the powers that be will not let the U.S. dollar system collapse here. And ironically enough, it will only collapse, and it will only go the way of things like the German mark or Zimbabwe currency or Venezuela currency, if there is some sort of alternative. And I just don't think there's an alternative yet. So if this is the case, then what that means is whatever the biggest components of this are, they are obviously going to dictate sort of capital flows. And interestingly enough, you can make the argument that the euro, as almost, I think it's over 2/3, but the euro currency, this basket of all these countries in Europe that decided to work together in their trading pair versus the U.S. dollar index, if it's a third of the U.S. dollar index, then clearly whatever policies, whatever direction is coming out of Europe and this bureaucratic entity, the ECB, it's going to affect the U.S. dollar index. And you can make a very real argument, it's really easy to do if you look over history, that when the U.S. dollar index is rallying and moving up smartly, it is literally a vote against the rest of the world. So, if we look at periods, let's see if we can go back. The only problem with this thinking is you have to understand demographic flows, and this is where it gets very confusing. Through the, you could argue that the collapse of the Soviet Union, a lot of capital came out of Europe and flowed into the U.S. dollar index. Which it flowed into the U.S. dollar, it flowed into U.S. equities, it flowed into U.S. Treasury bonds, prices went up, which meant yields went down. So in essence, when you have a rising currency, and this is the best case scenario for a country, and really if you want to screen the world for good places to invest your money, it's really simple. Bullish currency, look at the weekly chart. Is it Wing out and moving higher? Bullish bond market, are bonds Wing out and bond prices are moving higher, i.e. interest rates for whatever it is that these things are denominated in, interest rates are falling. And then finally, bullish stock market. If you can find those three scenarios, put them all together, it's a license to print money. And that's basically what happened for the United States of America following the end of the Cold War. They won the Cold War. All the capital that was locked up in Eastern Europe got the hell out of Eastern Europe and flowed into the U.S. It ran into U.S. bonds, it ran into U.S. dollars, and of course it also ran into U.S. stocks. Big honkin' bull market. Um, Demographics, baby boomers heading out of their peak earnings years, dot-com blow up, then, terrorist activities. I think you could make the argument that the US dollar needed to come down to alleviate that insane bull, sort of like ebb and flow, but also, too, we had the creation of the Eurozone, the creation of the euro currency, and the capital started to flow back into Europe. I think you could make the argument that sort of the worst case scenario for the U.S. demographics, the U.S. housing crisis, the financial crisis occurred basically at the bottom of the market. And interestingly enough, this was actually a very high growth period for things like Asia and for things like Europe. Then, since the financial asset crisis, we've been sort of muddling along here. And I might make the argument that, ironically enough, as of 2017, now is actually when we should start expect world growth to diminish. And I think China's basically built out everything that it's going to build out. I wouldn't be surprised, just like we saw Europe collapse there, money poured out of Eastern Europe into North America, we might see the same situation here with Asia. And guys like Dennis Gartman said, once China actually, quote unquote, finishes its build out, you're going to see capital flow out of China for the next 20, 30 years. And that's all we hear about now, is capital is trying to get out of China. That's why, Bitcoin's doing as well as it is because people are using Bitcoin to get their money the fuck out of China. It's fascinating to watch. So, oh boy, this is convoluted conversation. You're trying to get me to explain the whole world capitalist system in a nutshell. But in the short term, the way that I would look at this is, and you can see I'm hunting trades. I'm very interested in shorting these currencies versus the US dollar, by the way. But you could argue that, here is that Ides of March event. This is the world panicking. And this is actually, I also think, too, this was a coordinated effort by Russia and Saudi Arabia, and probably China, too, but we'll never know about that, to actually, I think this was a coordinated attack on the U.S., that swap banking system, and I think the attack was carried out through the crude oil markets. But you can clearly see the whole system went into free fall here. Notice that this was right around where the U.S. government panically passed that $2 trillion stimulus package. You look at all of the world currencies, they all were in collapse mode. This is collapse. So, the stimulus package, and this is the irony of it all, and if you watch those videos, and there's also another, the swap line guy from the Kawasaki video guys, he was saying it's so ironic that the U.S. government, the U.S. taxpayer, is encouraged, and now United States taxpayers, you're on the hook for $2 trillion, whether you like it or not. Merry Christmas. He was saying that the ECB, of course, has a swap line with the Fed, and they accessed it to the tune of something like $200 billion or something like that. So in essence, that's what, 10% of that $2 trillion debt that you Americans just obligated yourself to. And they gave the money to Airbus to meet debt obligations. Now, what a slap in the face to U.S. citizens. You just basically went into debt to subsidize Airbus, who is a major competitor to Boeing. Don't you see the problem with all of this? It's a mess. In essence, and I'll tell you, if that $2 trillion stimulus package was not passed, I don't know whether this thing would have actually bottomed. Like I said, I believe there was a coordinated attack on Western society here. The stimulus package was passed, and you can see this euro, it went through the process of bottoming and started to rally. And I don't know whether you guys noticed how have stock markets done recently. There's a very high correlation between euro and stock market growth. I think that has to unwind, but that's just me. The interesting thing about this last cycle, ironically enough, is actually the euro should have been strong through this, but Germany took advantage of that through this thing called the euro, and they enjoyed a very cheap currency, and that's why every second car on the U.S. streets is a German car. Anyway, point of the matter here is, the question specifically is, why do you guys watch the Euro conference so closely? Why do you watch these central bankers so closely? What I've found, and this is very typical, and this we have to go back down to sort of lower time frame. You know, this is a longer data chart, right? Daily chart, obviously pay attention to when the ECB and the Fed talks. But especially for lower time frame players, this ends up becoming the ECB is going to meet. There are a bunch of bureaucrats. They can change the rules at their leisure. And that's literally what our society's become. Again, go watch those videos. We have to actually democratize and take back the power of these central bankers. But right now, they're not accountable to anybody. They just do whatever the hell they want. So does it make sense that they meet like once a month and they have these public press conferences? Probably a pretty good idea. We better listen to what they're saying. And they might just go and change the rules and all hell's going to break loose and the goddamn currencies are going to go zooming all over the place. So, hey, we better pay attention. What's this here? Let me into the meat. Damn it. Somebody trying to get in here? Kavarkinator, do you see somebody trying to get in? Yeah, I don't know what you're talking about, Landon. You're just going to have to stand out there on the... camera is off. I have no idea what... Landon, dude, you're over there on Saturn. I mean, if you're going to hang out over there, we're all over here on planet Earth, so why don't you come on over here? There's the link. Come hang out with us on Earth. Landon's over there on Saturn trying to get in. You can't access the meeting remotely, dude. You got to come to planet Earth. There he is. All right. So we got him back in our orbit here. All right. So point here is, it's important, especially if you fancy yourself a currency trader. Remember, we've got one room on the site where all these guys do is just hunt levels on currencies 24/7. That's what they do. So if you're a currency trader and you can see this chart, what do you think? I mean, you tell me. The proof of the pudding's in the eating. You see the move. Why did the market stop here? Does it make sense that maybe they were buying the rumor and now they're having their meeting? And so around the meeting, there's a whole bunch of position squaring. And what did Lagarde say? Did she say something? Is the ECB going to do something new? You know, the irony of it all, of course, is as sort of professional traders, this has basically got our trade setups written all over it. You know, I don't know whether you can see this, but this was a slant. This was the actual news conference. And remember, we have this chart from here, right? If we see a chart that looks like this, you can see the outside upside key reversal. So clearly that's a base. And you see, we'll just do nice conservative levels here. Can you see, whoever asked this question, can you see how all they really needed to do, there's a key reversal off the top. What they really wanted to do was just bring the market back down to the first stop target. and just simply ask, is this still a bull? I.e., we come back to first stop, we put in big honkin' W's and continue our way up. Or have we transitioned and this is no longer, first stop doing its job, but it's no longer a bull. We actually M out and we're going to head back down. And look at the catalyst that they're doing all this into. So, is it important for us to pay attention here? I think so. And that's the interesting thing, right? Is that there is a real, if you want to get into Euro specific, we're just talking about the news conference. Why would you pay attention? You tell me, whoever asked this question, I hope you're watching this later on, but is this kind of anything that we teach in the program to maybe think about considering taking a trade? Sure looks good to me. Got a big old honkin' key reversal. Hell, I would short that just alone. Market worked its way down. Didn't quite come down to 38.2. But notice, gapped higher. Big honkin' rally right up into... Hey, that's a reload zone! So you've already got market structure. You see where the 50% rule is. It's way down here. So in a weird sort of way, if I'm hunting reload zones, and we have a rule, don't trust the first hour through the conference, you can see that they literally bid the market up into the conference. And what is this rebar pattern? Bang, bang, bang. Which is in essence, this right here is a sell signal. So on the other side of the actual conference, there's a big honkin' sell signal. What do you think? Strapping on shorts? How about this as a trade idea? Soon as Lagarde starts talking and I'm in 78.6 and I can risk against the top end of the range, I'm going to look to hit a 2-to-1. Not a bad trade. Bang, 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 bang. You could say, hey, I'm going to shoot for a gap fill. Because, man, that's one hell of a big gap. All the way down there. That's a 3.5-to-1. Look at that. Literally, wait for the conference. She's speaking. She's speaking. All right, she's done. Reload zones. Hit that thing. Back down we go. And notice we came down to the 38.2, that first stop target. And look at the cute little W that's coming in. And here we are, right back up. Now, this is an interesting debate, and this is more about what's going on a daily basis on the ground. Because right now, there's a very big difference between the way Eastern Europeans look at the world and the way the world functions, and the way Western Europeans look at the world. And I do believe that what's happening right now in the Eurozone is really going to test whether this Euro concept can actually work. In that, and this is just my impression, I've seen it, generations now. I believe that Eastern European society works better from more of an authoritarian perspective. They keep trying the democratic experiment, and it keeps falling apart. It's really sad. I don't know what it is about the society in Eastern Europe, but it just can't get going. And right now in Hungary, the gentleman who's in control right now, he feels very comfortable in the way that he is sort of squashing his opposition and silencing the media. And there are people in Western Europe who are like, look, if this is a common European zone, then we should have the same standard of living right across the zone for everybody. So democracy, freedoms, and I think that the Eurozone we're going to find out whether really this thing can actually work, because it's running into a major ideological problem, not only in Hungary right now, but I think also in Poland too. There's a lot of talk of heavy-handedness by government in the face of obviously very trying times right now anyway. But it's going to be an interesting test. So I think if all things coming out of the conference, if Miss Lagarde got what she wanted, then I think the euro would have worked its way down, and the US dollar, I believe, was at a long-term pivot. But there was a wrench thrown into the works here through the weekend, in that there is a debate right now as to whether, I think he's a Dutch politician, if I'm not mistaken. And I mean, what the hell? The Dutch, they're troublemakers, aren't they? I mean, let's call a spade, right? Sjord right now is shaking his fists. I'm just kidding. Hey, my mother's maiden name is Vandermeulen, so I'm half Dutch. So I'm criticizing myself here. Anyway, so I think if the powers that be coming out of this conference had let everything happen, I think we would have just careened our way lower. U.S. dollar would have ticked higher, but there was a major wrench thrown in the works heading into the weekend, and I think that's what's actually caused this counter-trend rally. Now, I don't know how it's going to resolve. I mean, like, hell, I get into trouble if I say anything about China. What do you think is going to happen if I say something about Europe? You guys deal with your own problems. All I care, and you've heard it repeatedly from me, and obviously it makes sense, the amount of activity I am on things like, YouTube and Twitter and stuff, is freedom of speech is critically important to a gentleman like me. If I don't have freedom of speech, then literally TRI doesn't exist. So I would prefer we not go the direction that Hungary and Poland and a few other countries, and of course, I mean, let's call a spade a spade. China is a totalitarian dictatorship. It is. Don't fuck around with this, people. It is. So I do not want our society to go the direction of China. But so fucking what? I'm just one guy. Here come a bunch of downvotes, right? China. Let's get a on those downvotes. Down to totalitarianism. Down to dictatorships. Free the people. Come on, ramp up those downvotes, Chinese. I know you hate me for saying that. Who knows? Anyway, okay, so I hope that helped answer that question. That's a big question you asked there. I mean, that's not a question that you can answer in 2 minutes. That's a question about, how the hell does the whole system work, and why would people, pay attention to things like, ECB and Fed announcements. All right. And by the way, everybody, it goes both ways. I mean, right now, if you don't wear a mask in Quebec, this guy DJ Thistle that I like to follow on Twitter, he was tweeting out stuff that, hey, the police will actually tackle you in the middle of a donut shop and pepper spray you and kick the shit out of you for not wearing a mask here in Canada now. So that's the kind of world we're heading into, people. We're heading towards totalitarian dictatorships, which really sucks. I mean, I don't like it. I don't like it at all. It's brutal. So anyway, go figure. Okay, let's see. Okay, so I hope I talked to whoever asked this question. I hope I helped a little bit with that. COVID kind of gives us the background for more. Yeah, totally, doesn't it? I mean, Landon, they say that this Pluto event is a consolidation of power. Can you see the consolidation of power happening? And the cool part about it is if you watch that video I told you, the Prince of the Yen guy, he actually explains exactly how the consolidation of power is happening in these central banks. It's beautiful. And the irony of it all is that all it is the central banks are putting all the regional banks out of business. And the ECB, by charging negative interest rates, you might think that that's helping you and the public, but it doesn't mean jack shit to us in the public. What it does, however, though, is it squeezes all the small banks' profit margins and puts them out of business. It's the most efficient, beautiful way for that Christine Lagarde to take over. She's your Christine Lagarde's bitch now, everybody. I hope you understand that. Oh, goodness. Now I'm really going to get myself into trouble. And Landon says here, 2021 looks nasty. Let's see what Landon has to say here. This is going to be good. 2021 looks nasty. Saturn square Uranus is the digital world currency, seems to me. Actually, and that makes sense too. Because if you listen to this gentleman, if the central bankers can pull off this digital central bank currency, then they've won. They've taken over. So ironically enough, this cryptocurrency and all that, the day that you see these central banks where you have to have an account with the central bank to actually get your digital currency, the consolidation of power is over. They've done it. So, hey, welcome to the future. Okay, let's see. Related to the above, I've seen Brian posted this chart saying BTC still leading indicator IMO. And it's saying cool them jets. Don't think I'm going to be buying long equity munch for a while. Well, that's not a bad idea, my friend, whoever you are. Okay, could you explain why? Does Brian sees BTC movements as an indicator of what is going to happen to stock, and since crypto is bearish at the moment, stock might follow? I would imagine this is, well, let's see what we got here. Yeah. So, maybe what we should ask ourselves here is, why did the market go up here back in like March? Maybe that's what we should actually ask ourselves. They'll bait the message. Yeah, totally, Sebi. I mean, the irony of it all is that, they always say, how do you get somebody that doesn't want to do something to do something? Well, you incentivize them the exact opposite through fear. So if people don't want to be Big Brother, they don't want that world, which I think if you ask them, do you want to become a robot? Do you want to be a minion? Do you want to have everything that you do, including pulling that little puppy's tail back in the 3rd grade? Do you want that on a record? Do you want to, like in China with their social credit score, I was teasing Andrew yesterday, we would have both been nailed big time in China because we jaywalked. And it's like, do you want that world? Well, obviously, if you ask people, no, they don't want that world. But how do you get them to actually ask to be a part of that world? Well, maybe spin it around so that they don't have any income and they don't have any food. And, they're going to get evicted from their homes this fall. I'll tell you, I mean, this world's going to get really ugly here over the next year or two. Sucks because it's sort of been predicting that this was going to happen for quite a while. I just never knew how ugly it was going to get. But how do you incentivize people to sign up for Big Brother World? Well, I know. If you sign up for this, we will... Oh, isn't that interesting? It looks like you... Oh. I wonder, is YouTube still working? I noticed my screen's going a little funny. Can be everywhere. And probably, we're talking about the central bankers and how they're going to take over the system, so it would make sense that they would destroy this video. But yeah, I think we're still recording. How about you guys here in the Hangout? Are you still going? Yeah. Okay. So, how do you... okay, so here's the central banker himself. This is the guy. This is my minder. Everybody, I don't know whether you can see it. This person who is going to join here, here's clearly my minder. I have no idea who this person is. It wouldn't surprise me. I heard that Da Vinci he's under the gun right now. Anyway, just to finish off this thought, the way that you can incentivize people to join up to this, now we're all going to, of course, be vaccinated, which means we get a Mr. Gates chip in our arm for the rest of our lives. And you have to sign up to the digital currency. I wouldn't even be surprised if the chip is scannable, and that scan is somehow attached to your record on the blockchain. That wouldn't surprise me. It is what it is. I mean, that's just about the way it is, eh? Sad. The good part about what we do here is, play within the system as long as you have to. We can show you how to make money and get your account big enough so that you can just sort of detach from the system. I've got Zach right now shopping for land in Hawaii because I'd love to go and buy like a nice remote piece of property there in the jungle and just sort of detach from this crazy nutso world that's happening here. Also too, I've got Julian keeping an eye on the ground, although I don't know whether I would prefer, to be honest with you, for the next 15-20 years to be invested in the US and those assets. I mean, frankly speaking, I don't know what the world economy is going to do here. Like I showed you there, if you're not in that swap agreement world, your country could go through some pretty challenging times here. So anyway, back to this comment. So why did these assets go up? I mean, that's really the question. Will you take the chip, Mr. B? Oh boy, let's slip that noose right around Brian's neck here, well ahead of time, so that whatever answer he gives, we can hold him to account. I'm gonna say no comment. Thank you. Let's get back to the questions that were asked in the school. Why did this market go up? Right? I didn't hear anybody answer this question. Why did these assets go up? Good. Well, no, don't think of it that way, Cheryl. I mean, the reason why these things went up is that somebody stepped in and bought. So, in a weird sort of way, you can actually look at this image as sort of like a preference. Does it make sense that right out of the gate, the first thing that people bought was Bitcoin? Do you see that? That was, if somebody, through the crisis and all the fucking mess, what was it that people bought? When the fucking sky was falling, what did they buy? Remember, at this point, right in here, the U.S. Federal Reserve came out and said, okay, here's a whole bunch of money. You go buy anything you want. What did they buy? They bought Bitcoins. And then, after things sort of settled down, okay, well, we can come in and buy some stock. All right, well, fuck it. I know those Russians and those Arabs are fucking around with the oil market, but we can come in, but they weren't going to touch oil right away. And really, I would argue this is an excellent anecdote of what to expect in the future. What does Bitcoin represent? One sector. Is this sector done fairly well? No, I want you to think about what part of our world does Bitcoin speak to? Does it speak to a guy sitting in Lubbock, Texas, and he digs ditches for fucking the city or something? Does he really know anything about Bitcoins? I mean, come on, seriously. Who buys Bitcoins? Does the jazz musician sitting in fucking Louisiana, New Orleans, some seedy bar that's like half filled with smoke and they're all drunk. Is he buying Bitcoins? I mean, honestly, come on. So the point here is, okay, Omar, good, but it's tech. Does it make sense that it's technology? And really, I will tell you absolutely without a shadow of a doubt, and I remember because this is when I was starting to pay attention, in the early 1980s, heading into that particular greed cycle, tech went crazy. I mean, that was really the time when Apple Computer really just went absolutely apeshit. And Microsoft, I don't know whether you guys are aware, Microsoft was a penny stock at one point. That's when these tech stocks really got going, like the serious ones. Was back in, and the biotech stocks. I find it hilarious. Somebody is actually trading a stock that I used to trade back in the 1980s as Biomira. And I pulled up the symbol. I was like, you got to be kidding me. That stock is still around? And it's a biotech stock. What a coincidence. Biotech is doing awesome right now. So, to answer your question, I believe that Bitcoin is, if there was like a list of assets that money managers wanted to own, I believe Bitcoin and Amazon and Microsoft and all these, various different pharma names and the eyes and the ears and all those kind of fun tech stocks that we're banging out doubles and stuff on, that's the hot part of the market. And unfortunately, especially something like commodities, this is last cycle story. And unfortunately, everybody's focused on last cycle story. Why are the altcoins and these crazy new ideas, why are they getting money bid into them? You can see stock markets like, kind of going sideways now. I mean, have you noticed some of these blockchain companies? Their prices are going crazy right now. Because that's where growth is, guys. Like you gotta understand, if you were in like the classic retail, let's say you were like, I run conferences for department stores. What do you think the prospects of your business are going forward for the next 5-10 years? Is that a growth industry? Oh, look at all the people going to department stores to buy stuff right now. But hey, I run conferences. Every year we have Department Store Con. And I've built this business doing conferences around the country to the department store industry. You think that's a growth industry? Probably be kind of a boring conference, wouldn't it? How about you people over on the YouTube? Are you getting this? Does this make sense? Where is the growth for the future? Is it in the department store industry? I got a feeling the YouTube page crashed because I don't see anybody over there. Can somebody over on YouTube say something? I don't know whether it's working. I got a feeling it might have crashed. Oh, there you guys are. There's that Sabi guy. Tech. Right. Also, too, is there something about Bitcoin and blockchain that if the fucking whole world is collapsing around us, that, hey, maybe we can actually think that there's actually some base value to this thing? I can tell you, when they were panicking, they couldn't find any base value to the price of crude oil. Does it make sense that if I can buy Bitcoins below the cost of production, that, hey, you know what, that's actually a pretty good deal? Because I know some mining dude, he's going to come along and he's going to keep mining these damn things, and his cost to mine the Bitcoins is going to be what, his cost to mine these damn things. If I can go into the marketplace and I can buy them cheaper than what Mr. Mining Dude is mining them at, isn't that a good deal? Sounds to me like it's a good deal. So, because of those two facts, I do believe that Bitcoin right now in this really weird environment is actually a bit of a leading indicator. Well, not watching. Sabi asks, are you still watching Hut? I've already got my free share position established, Sabi. I don't even give a shit what happens to it next. I don't care. They're free shares. Am I watching it? Yeah, I might. If it goes and bottoms again, I might go take my original capital back and go and buy some stock and look to sell half on and double. But right now, couldn't give a flying fuck what happens to the rest of it. Hope that answers your question, Sabi. Yeah, tell me about it, man. Free positions, I tell you, it sure makes playing this game easy. Like I said, I want to try and keep as much hair on the top of my head. I want to try and keep from going gray or going white as long as possible. So that's why I do this stuff. Okay, so I hope that helps answer to that question. Okay, 6. In the Willie video, you mentioned using RSI. You are using RSI with a 7 signal strength, but I see on your recent charts that you are back to at 14. Any reason why? When I was actively trading and hunting trade setups, I use the 7-period RSI because it gives me much crisper signals. And I really, I walked you guys through the whole using the 50-line resolution to give you sort of uber moves in RSI. And when I use the 7-line, it gives me faster, crisper signals. So, here, we'll just show you for example. Let me just throw on another one. I just want to do that. Add indicator. Will that work? I don't know if that'll work or not. Maybe what I'll do is we'll just indicator. Relative strength index. Ironically enough, for you guys in this level 1 course, I don't actually officially teach RSI. I know you guys really are, the public, of course, it's one of the first sort of indicators that anybody in the public sort of gets told about. So it's pretty popular. But as the oscillators go, I personally, and this, I suppose level 4, when the fuck are you going to get around to it, Brian? This would be a good conversation to have. And I've actually also thought about reworking that whole level 1 program. But I really want in the level 1 program for you to leave understanding the MACD divergence concept coupled with the Willie Willie indicator to really give you powerful momentum setups to trade that L-Tangonator trade setup. That's really the purpose of teaching you guys that. Could I do a whole program on RSI? Yes, and actually I've asked one of my business partners who really likes using RSI to do that, so we're just waiting on him on that. To answer your question specifically, like when I used to trade actively, keep in mind, I don't really trade that actively right now, mostly just position trading. Not really like day trading kind of thing, but here you can see RSI 14, RSI 7. So what you should see here on the 7 is notice that this is much crisper than the 14. Notice how the 14 actually goes to new highs here, even though the 7 actually gave you a very powerful little M top there. And you also notice that it happened here as well. So a little bit faster, a little bit crisper signals out of RSI when I speed it up. Also too, here's a good example. If I speed RSI up, and this is why I like using Williams percentage R just out of the box, you can see the 14 period RSI, we never did get overbought here. So if you were using RSI as your overbought, oversold indicator, there is no overbought reading here. But you notice off of the 7, yes, we did get overbought. So in this particular case, this would have kept me out of a lot of trouble here. And then you can see on the flip side, we actually went oversold on that dump right in there. But the out-of-the-box 14 did not. So RSI out of the box, and I don't like anybody using indicators right out of the box and using classic methods that are taught sort of in the public to use indicators. Everybody in the school should remember one of my favorite crude oil traders of all time, Mountain Man. He hated indicators with a passion. Get those fucking things off my screen. But the problem here is that most people use indicators in a very sort of predictable way. Kind of like, well, if RSI is overbought, then I'll short, and if RSI is oversold, I'll buy. No indicators ever work that way. And if you fall into that trap, you're actually just playing into a lot of market participants. They will force these indicators to go into oversold, getting you to think one way when they're actually taking the opposite trade. I've seen that happen repeatedly, especially on things like penny stocks. You can get stock operators that will actually paint a very particular situation on a chart just to get the noobs to do stuff. Things like, well, we'll take RSI overbought here, kind of this quick pullback. All right, the noobs are all going to go short here, but it turns out that they weren't done, and indeed we went to new highs and they ran their stops here. That's very normal. So I don't know whether that helps answer that question. I did show you in the Williams percentage R part of that price oscillator lecture why I like using the Williams percentage R versus the RSI out of the box. And the fascinating thing is, if we go oh, but it never loads. Okay, let's see. Oh, there it is. Since you have to go Williams, you'll notice that the out of the box Williams percentage R has a default setting of 14. Remember, Willie is a heavily modified Williams percentage R. But what you'll notice is the out of the box Williams percentage R, it actually looks more like this 7 period RSI. Did I do that right? There we go. It looks more like this 7 period RSI, overbought. Interesting. Huge difference in signals here. But overbought. You can see the cute little M came in on Williams percentage R, M in RSI, no M in the default RSI. So the number one reason why, my evolution, me personally, spent a whole bunch of years working with the out-of-the-box RSI. Then I sort of said, okay, well, what happens if I speed the RSI up a little bit? Ooh, I get a little crisper signals. Ooh, look at that. I get an overbought signal, but I don't have it here out of the box. Ooh, I get an oversold signal, but I don't have it out of the box. Okay, I kind of like this, right? Then my next evolution was, are there different ways to study price momentum? This is where you take your analysis to the next level. And what you have to understand is that RSI and something like Williams percentage R, they're actually calculated very differently. And it turns out, like, here's a great example. If you calculate price momentum using the Williams percentage R method, you actually get much faster signals than RSI. I'm not going to go into the explanation of the difference of the two. Like I said, level 4. Oh, geez, I suppose we can get into it. If you do continue on the education program in the level 2 program, we introduce you to how to spot profitable timing signals manual. And we go into giving you the ability to actually build these indicators yourself so you understand the workings, the differences in the way you calculate these different price momentum indicators. But the point of the matter here is that I eventually got to the point where I really like the stochastic method of calculating oscillation, which is Williams percentage R is calculated the same way as stochastics. And I also liked how crisp the signals are, in that, like here, for example, we're overbought. Out of the box, RSI and overbought. If I had gone and bought that, I would have looked like an idiot. So I hope that helps answer that question. It's not an easy question to answer, but I hope that helps a little bit in understanding. All right. If the person who asked this question is here, just let me know whether I helped with that. All right, take it easy, Colleen. Holy shit, look what time it is. Yeah, I got to get going here, too. Oh, my goodness. Yeah, it's late. Okay, number 7, we have seen indicator analysis around price and volume, but curious, is there a way to analyze time relative to price volume as well? There is. I don't teach it in the education program, but there's what's called equivolume bars, which is really cool because it actually changes the size of the candlesticks relative to the actual volume that's traded. And it gives you a very different look at price action, where obviously really heavy volume days, you're going to see honking big candles on your chart. And very low volume days, you barely can see the candle. Is that a level 4 topic? Oh, screw it. Every goddamn week it's like, okay, well, there's another module I can do. There's another module I can do. There's another. Yeah, I mean, you could argue to a certain degree that point and figure charting, which we do in the level 2 program, tries to remove time from the equation. So that would almost be the exact opposite of time relevance. But interestingly enough, when we apply Gann principles to point and figure charts, we get some incredibly powerful levels. So, short answer, yes. Not covered in this education program. Long answer, we can give you ways to look at price and time relative, price relative to time, we'll say. Actually, well, both. Price relative to time, Gann, and then price taking time out of the equation, point and figure charting. Could I include a equal volume module to help you understand the relative significance of volume and time? Yeah, I could, but it's not something that I've gotten to the point where I even have time to address here. It's a whole can of worms unto itself. But if you want to Google equal volume bars, I don't know whether even TradingView even has them or not, but I did study that for a very long period of time, and it is an interesting way to look at price and signals. Obviously, volumes, price breakouts on volume obviously speak volumes, right? So. Okay, it is getting on 1 o'clock here. I do have to go get pretty for the boy. They don't have equal volume bars. That's too bad. So maybe somebody lobbying TradingView, ask them to put equal volume bars on and then harass me, and I'll do a tutorial walkthrough on how to use them. Ninja Trader and Sierra Charts too. Thank you, Peter. And, Peter is the one who showed me this video. I shared it in our Level 3 program yesterday. So big shout out to you, Peter. Really appreciate you sharing that with us. This was a really, really good interview. And I talked, I don't know whether you were here earlier, but I talked quite a while about this. I was really impressed with it. Actually, that's weird. It's supposed to be Prince of Yen Central Bank, but I can see on the chart on the screen here my screenshot. So I'm not sure what the fuck's going on there. But anyway, good luck in seeing if you can find that video to watch it. Okay, everybody. I didn't really talk too much about price action. You guys all know my thoughts. There's not really a hell of a lot going on in the corn right now. This is one of these violently flat kind of market states. I am very interested in going and buying some December Ethereum puts. Had a meeting yesterday with my local boys. We're going to throw in a bid for some 180s in December. Just keep accumulating a position heading into the fall. Do have some September Bitcoin puts on the books. I'm not really interested in adding to that position unless we get a nice big counter trend rally up into the better part of 10,000. Believe it or not, that's not totally out of the question here for me in the short term. But, trying to force a bull market in these markets right now is like pushing a chain. Where is the money? Clearly, it's in these altcoins. I hope you've been able to take advantage. I've been squawking about this ad nauseum over the past 6 months. But, when I say that kind of stuff, the Bitcoin maximalists shit on you. And, of course, while the altcoins are down, nobody, respects the message. But, here's a good example where, you could have had your money sitting in Bitcoin just waiting, or you could have taken advantage of this. That's up to you. I'm not here to tell you what to buy or sell. Frankly, I couldn't give a rat's ass what you buy or sell. I would like to be a good mentor and demonstrator of best practices. So, for example, I had a name that I really like, this RLC. It came into things like 50% rules, which is very normal. It hit a second double level for me from nanny nibble purchases that I did last year. So being a demonstrator of best practices, it's probably a good idea to force myself to ring the register here a little bit. So that's what I do. Here's just a great example. I mean, you could just be sitting Bitcoin maximalist and ignore this shit. I don't care. It's not really any skin off my back, but I'm in there taking advantage of these markets. I forced myself to buy against the bottom end of ranges. Now I'm getting paid and I'm forcing myself to pay myself. There are names. I talked to you guys at length about how much I really like the guys at this Syscoin. I like these guys. And now, is there a letter of the alphabet, maybe for the clothesline people to help you? Is there a letter of the alphabet that you possibly could be seeing on your charts right now? Is that the kind of stuff that technicians like to see? I mean, it's not rocket science what we do, but when these W's do start to come in, you have to force yourself to act. You just have to. And the funny thing is I know damn certain I was squawking about this through here, and people are like, you're an idiot, Brian. All coins are garbage. They're going to zero. Shit coins. All that. Fuck you. I mean, I've been playing this game long enough. I tried to help you guys and tell you about this. If you can take advantage of this, awesome. That's why I do these videos. If you can't and you're just a spectator, great. Try and learn from this so that the next time you see these charts look like this, you can participate. Here's a great example where we just forced ourselves to come in at the bottom end of the range. And you can see, of course, we are sitting on a free position right now. And, as I just showed you on that RLC, demonstrator of best practices, don't be shocked if you hear see Brian on Twitter, whatever, telling you that, hey, market rallied into my next double level and I let him have some more. I mean, it's just what I do day in, day out. So that's the kind of market that we're in right now. You know, enjoy it. Have some fun. Don't take too big a risk. Don't put yourself into a position where you can't come back and play the game again tomorrow. Just slow and steady wins the race. All right, everybody. Wish me luck with the boy this afternoon. It's always a challenge with him through COVID. PMA for the win. Hope you enjoyed that. Maybe give us a thumbs up. Subscribe, like, ring Colleen's bell, as we used to say. And, you know, have yourselves a great day. All the best, and bye for now.